That's all right. A second here. Good morning, everyone. We'll give everyone a couple of more minutes to log on, and then we will start the presentation. Okay, we're going to go ahead and get started. My name is Andre Hargrave. I'm the director of the Denver Minority Business Center, which is funded by the Minority Business Development Agency here in Denver, Rocky Mountain region. And today we're going to be talking a little bit about bonding. I know bonding for most companies is a sticky subject. You can't win large contracts unless you have the bonding. You can't get bonding unless you got a performance history. So those kind of things run hand in hand. But today we have Alan Green, who's an expert on bonding. This is a two-part series. And Alan, I'm gonna have Alan take a moment and explain his background and who he is. I'm gonna turn it over to him. But before we do that, I'll just like to put out an invitation for anyone that's in the Denver metro area or our surrounding states, which is include Nebraska, Kansas City, and Missouri. Always feel free to reach out to the MBDA here, and we can assist you with funding. Our specialty is governmental contracting. We do an enormous amount of that here. And with that said, Alan, would you like to take it from there?
Yes, first of all, good afternoon. It's still 11 o'clock there, so that might be mid-morning, pretty like for you all. But anyway, I want to say I hope that I share information with you all today. A little bit about my background. I've been doing bonding and financing since 2011. I found out sitting in a lot of meetings that, especially on government contracts, that minorities at that particular time, just like now, couldn't get access to bonding and they were having a hard time in financing. So I saw that as a niche. And so I moved toward there. Of course, got into again what it takes to again write bonds, what it takes to do financing, all of that wonderful stuff. And so as we move through this today, we're going to go through the generalities of bonding. I'm going to assume that no one knows anything about bonding at this particular point. At tomorrow's workshop, we will get more in depth into it. We're going to go through the application or questionnaire first because it's very important that you fill these documents out in detail. The next thing, of course, is the financial document that we will go through. And the third, again, will be work on hand. But I'm going to assume that you know nothing. So as we go through all of this today, I will give a quick some stories here and there on the importance of why some of these things are very, very, very important to fill out in detail. And one thing I'll add before we get into this too is because once these documents are filled out, I usually send these documents to the underwriter. And then the underwriter reviews this, and then the underwriter actually makes the decision. But it's my job to sell you to the underwriter, which is either insurance company or individual surety that I use. And so I have to sell you. So that means I have to read over all these documents and then I again turn them in and then they start asking me questions. And if I can't answer the questions, then that means I have to go back to you and it just slows up the process. So let's begin. This particular questionnaire that we have in front of me, I deal with, again, I'm a broker, I deal with various companies. So I chose this one and we'll go through it. And again, I'm going to assume that no one knows anything. So basically, it's like filling out a document if you go to the bank, but these are insurance companies. And of course, they want your background information, which is your company name, your address, basic stuff here, phone, fax. A lot of people don't use fax, but federal ID number, total number of employees, which is very important. Of course, the form of your organization. Are you a LLC? Are you a corporation? What are you? Proprietorship. These are very important to fill out in detail. The date your business was formed, the date you were incorporated, name of residence, ownership, title, responsibilities, social security number, marital status. Why these things are so important too, and I'm gonna give you examples. Years ago, there was a company that I was dealing with. They were new, and the wife did not want to fill out or put her name on any of these documents. We couldn't get them bonding because she did not want to participate. And even though the wife and the company may be separate from the husband or the company may be separate from the wife, it's important that you have the go ahead of your spouse when you're filling out this information because they're going to, again, is going to review that. And then underwriter is going to ask questions. Well, what is the spouse's social security? Is the spouse a owner in any of this? Is the spouse willing to sign off on any of that? That's very, very important. And so make sure your spouse, I don't care if it's the husband or the wife, is in tune to what you're doing. The next thing on here again is has your business passed ownership within the last 2 years. The reason why that's so important down there too is I'll give you an example is I was working on a project about $6 million, and the gentleman kept saying that the partner was going to be bought out. He was going to buy him out. He was going to buy him out. So we basically sent it through the underwriter. And the underwriter asked that question. And I, of course, knowing the information that I had, I said, well, they're going through a transaction right now. And the minority owner is going to buy out the majority owner. Come to find out later when they won the project is that it didn't happen. And that got a little bit sticky because again, they said that again, someone was going to be bought out and it didn't happen. So these, you got to tell the truth, in other words, and they're looking for the truth. The next one is, of course, is the company or any owners connected with other companies that operate as a parent, subsidiary, holding company, or affiliate. That's why it's so important too. Going back to that question, when they were negotiating the particular bond, they wanted to bring the cost down. And they were in way back to 2008, and they were talking about can they get the bond at a cheaper rate? Well, I couldn't get the bond at a cheaper rate, and I did not know again that the minority partner could get it at a cheaper rate and did all the work, sent it to the underwriter, got the approval, and they ended up using the minority owner's bonding capacity to go ahead and do the project. And of course, I didn't get paid. So those are why sometimes this is so important. Have provisions been made for continuation of duties of the owner and an orderly transfer ownership in the event of death? That is so good when you have a succession plan. Most companies don't think about, again, and most people don't think about dying, but it's going to occur. And the underwriters are going to ask those questions. Do they have a succession plan? Because if you're in the middle of a project and God forbid that you die, who's going to carry on this project? It may seem like that may be selfish, but they want to know because they want to know again, how is this project going to continue? And those are very important things. But you should have a succession plan no matter what, or who's going to take over ownership of the business. The next one, next page. Key personnel, which we're talking about right now. Again, who, if you do die, is going to run the business? Do you have a foreman? How many employees do you have? If your company is a plumbing business, who signs off on the projects? If it's a electrician, who signs off on the projects? If it's an engineering company, who signs off on the project? But they also want to know the name, how much time you've already spent with the business, and your background. Those are very important because when you're going through the underwriting, not only are they looking at your finances, which we'll get into a little bit later, they're looking at again, if something happens to you, if something does, how is this business going to continue? So they look at again your operations experience, type of construction that you do. Do you do drywall? Do you do electricity? Are you a general contractor? Are you a specialty sub? These are the kind of things that the questions that the underwriter is going to be looking at. And these are the kind of things that you need to prepare yourself when you're filling out these forms. Then what is your geographical area operation? When you're talking about what area do you want to concentrate? Are you going to concentrate in the city, municipality, the state that you're in, or do you want to grow that past that? Because some companies win projects out of state. So we, of course, have to turn all that information in again to make sure you're a viable company. Then it says list the six largest, most important contracts completed in the last 5 years. Yes, they want to know what projects have you actually competed. The person, again, the contractor, general contractor that you did and performed the work with, the phone number, fax, contract, uh, description, contract amount, and date completion. We want all that information, and we're going to get into that a little bit later because it's so important when we're talking about your experience and completing projects. What is the single largest contract you expect to perform in the near future? What are you looking at bidding on? That's so important as a business owner. So when you should be looking at 2 years to 5 years down the road, some companies say, well, I'm just trying to do 6 months to a year from now. You should be looking at the future and how you're growing your company. Is very important because the underwriter is going to look at that and I have to explain it. What is your average annual contract revenue? And that's so important too. And of course, you should be keeping your books and you're looking at again what kind of revenue you've been bringing in. Because again, you're looking now your track record, which is so important when we show the experience of your company and completed jobs. Do you presently own the equipment necessary to complete current and existing contracts? Well, a lot of companies actually lease their equipment. And if you do, there's nothing wrong with that. But there's companies out there that, of course, buy their trucks, they buy their equipment. All of that is, those are assets. And the underwriter wants to know what kind of assets that you do have. There's nothing wrong with leasing the equipment, but they want to know, are you buying, renting, or leasing? So check off the box there. Are bonds required from the subcontractor? If you are general, then you may write, have a bonding capacity that covers the subs, but most general contractors want the sub to also carry a bond because that cuts down on the liability of the general contractor. So you can check yes or no on that right there and the amount if you do carry. Bonding, okay, it says right here, can you talk a little bit about the capacity? Bonding credit and history, and then I'll go into the capacity a little bit. Bonding credit and history, present and most recent bonding company. Why that's important is, again, have you applied for a bond before? They want to know, again, if you have applied for a bond, what is the recent company that you're with, and how long have you been with them? And when you're talking about capacity and have you applied for a bond, a lot of that depends on the assets and the jobs completed. When we go through this information right here, we're going to be looking at, again, the assets on hand. And just like when you go for a loan, bank, they want to know how you're going to pay. If you default on a project, how are they going to get their money back? Bottom line. So when we're talking about capacity and say you 500,000, I'll even say 250,000. Do you have $250,000 in assets that you have that's going to be, when they're looking at all of this information that we're about to present to them, that if you default on a bond, how would they get their money back? So if you're bidding on a $250,000 project, how would they get their money back? If you're bidding on $1 million project, how are they going to get their money back? And so when we're talking about, again, your house, your cars, your trucks, uh, your bonds, and any cash that you have on hand, which we're going to go through. Those things are so important because it's just like filling out an application to get a loan. They want to know how they're going to get their money back. It's very simple. That's why when they're talking about the present and recent bonds and the bonding agent that you dealt with, if you have a company that you're dealing with right now, they want to know, well, why are you switching companies? And it's as simple as sometimes you just want to make sure that you have more capacity. One company may have given you a capacity of $1 million or $250,000, and you have 3 to 4 projects going on, and maybe you have a couple in the hopper that you want to bid on or you won, and you want to see if you can make that capacity a little bit bigger to be able to cover all those different projects. Have you in the past, or do you use more than one surety at a time, which we're talking about right now? How many companies have you used? And if you use one and you're looking at using another, they just want to know. Now, some companies, if you answer yes, they may not give you a bond because that's what some insurance do, just like when you go to the bank. They want to know again, are you up to the maximum in your capacity when you're bidding on projects? That's why it's so important as a minority, you need to know who you're dealing with when you're talking about when you go for your capacity. What's your aggregate on each project right there? It's very important. Is collateral currently posed in any surety secure bonds on behalf of the firm? Yes, sometimes that is because the company, insurance company usually want to know sometime how they're going to get their money back. And when they get through going through all these forms right here, the bottom line is if you default on a project, they're taking your assets. I'm just going to be real. They're going after your assets. And so collateral is what they're looking for. Has the company, affiliate, subsidiary, any owners or companies had ownership interests? That's why it's important too. They want to know, do you have partners? How much interest do your partners have in the business? You know, some partners are quiet, silent partners. But and then sometimes people don't list those silent, quiet partners there. But if they do have any interest in the business, you should list that information because if it is a default and you do not finish that contract, not only are they going after your assets, but they're going after assets of your partner. Again, and it mentions, have you ever experienced bankruptcy? We talked about that. Receivership, yes. Liens. Are you paying your suppliers on time? That is so, so important. I found over the years it is hard, especially with minority businesses, to make sure they meet payroll on time, but also making sure that they pay the suppliers on time because you may not get paid in 30 days. Sometimes they may drag it out. It may be 45 days, 60 days. And those, of course, suppliers still need to be paid. And sometimes, even down the road, if you haven't paid them, they may put a lien on your business. And then all of that and more is going to be reviewed by the bonding insurance company because they want to know again, are you bondable? How many liens do you have or defaults that you have out there? They want to know all of that. So if you just check no, or you check yes, explain it. That's all you have to do is explain it. Okay. Banking information, the name of the bank that you bank with, the account manager. In today's market, bankers change so much. And so you may have a banker that here today, gone tomorrow, but you still have to put a name in that column because what the underwriter is going to do, the underwriter is going to call your bank and ask for that particular person that you're dealing with. And it's good that you do know and have a relationship with the banker. The phone number, the email address, of course, the customer. When you're talking about how long have you banked with that particular bank, do you have a line of credit? Okay, these are very, very important things. If you do have a line of credit, are you using that line of credit or is it just sitting there? All of those are very, very important information. And then you're talking about, again, when you talk about your signatures, does anybody else get a chance also to sign on to any of the transactions that you do? And that is very important. We can go to the next page. Accounting information. Name of the accounting firm that prepares your financial statements and tax returns, the company. Very important. The underwriter is going to contact your accountant or your accounting firm that you deal with. You need to know that up front. Accountant's name. Now, if you use quick tricks, ooh, that was a tough one. Sometime, if you use that software, the underwriter may accept that. So just you may not have a firm that you're dealing with. You may just be using the software. You can turn in that information. And so don't be afraid of that. But they do contact, if you have an accounting firm, they also look at to the larger firms when the last time you had an audit. And that is very, 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 very important. How long have you been using this particular firm? They ask those questions. Are you using a CPA firm or not? They ask those questions. Again, what is the basis and the background of the CPA firm? And when you look at again, when the CPA firm and the paperwork that's turned in shows how your company is operating. I'll say that again. When the CPA put your financials together, that is so important because it shows how you are performing, how your company is performing. And that is so, so important. And we're going to go through more of that a little bit later. When we're talking about the S corporations and we're talking about corporations or LLCs, things like that. Again, it mentions down here current spouse and things like that. We talked about that earlier in the process. Do you factor pledge your accounts receivables and contract receivables is so important because again, some people aren't getting paid in 30 days, 45 days, 90 days. So when you're talking about your receivables, you are looking at now, and a good thing that you may have a good accountant because that's money again that you haven't even got a chance to reach their bank account yet. But everybody is looking at how are you managing your company? And that is so important. And that again is the reason why with the bottom line is what does your assets look like? Can we go to suppliers and contractors? When we're talking about suppliers and contractors and making sure that people are paid on time, are you paying for if you have a trailer? Do you if you're using trucks that you may rent? Do you have other suppliers that's out there and maybe pending? All of those things and more. Are you in good standing? Because the underwriter is going to call those individuals that you list right here and find out are you in good standing. You need to know too that they're going to run your credit. And when they run your credit, if you have some things on here that is not listed, they're going to check also with those creditors. And so make sure you put as much information on these forms as possible because the underwriter is going to check. Next form. And it should be, again, the financial statement. As we go through this financial statement right here, again, we talked and touched on a lot of this. You know, your social security number, your date of birth, your name, your spouse's name. That's why it's so important that you have your spouse on board, your spouse's social security number, your spouse's date of birth, your resident address. And some people say, well, I try to keep my business separate from my residence. You need to know that when we send the information to the underwriter is going to not only check your business when we're talking about financials, and we're talking about, again, your credit, we're talking about your personal credit and financials. They're going to check that too. And some people say, well, I don't want them to do that. I'm just letting you know ahead of time, they are going to do that. Okay. So they're looking at your assets, cash in the bank. Again, notes receivable, accounts receivable, stocks, bonds, securities, real estate residence, real estate investment and other, cash value, life insurance, personal property and other assets. Then you look on your liability side, loans payable, the banks, notes payable, accounts payable, tax payable, mortgages payable, other liabilities. Why this is important? Years ago, I had a company, they did cement, masonry. They did wonderful work. And so they applied, they wanted to get a bond, they wanted to grow their company. But I turned in the paperwork and reviewed it, and then the underwriter also reviewed it. We noticed that they were taking the money out of their business and spending it on the personal side. So the trucks that they were driving, not only were they company trucks, they were personal trucks. The trips that they were taking, They were paying for the trips that they took and the family trips coming out of their company. They were paying for their mortgage out of their business. And the underwriters spotted all of that. So when you turn in your paperwork, especially your financials, they're looking at how are you spending the company's money. Also, how you're spending your personal money. Because if you're commingling your company money with your personal money, they're going to spot it. And 9 times out of 10, you won't be able to get a bond. If you, of course, if you're paying yourself a salary, that's understandable. Bonuses, understandable. Are you paying your spouse a salary? How does she fit into the company? Is she the one that's handling the books? Is she's the one that's helping to manage the company? All of those things need to be explained. If she's getting a bonus at the end of the year, it needs to be explained. Total income needs to be explained on the money that's coming out of the business and going into your personal finances. Supplementary schedules of assets and liabilities, cash in the bank. Very important. I keep and I will emphasize this over and over again. They're looking at when they write a bond, how they're going to get their money back. So that's why they're looking at your personal as well as your business. And so they want to know again, what banks do you use? What notes and accounts receivables that you have coming in? Do you have stocks, bonds, and securities? You need to list all of that and more. This one that should be real estate. Again, do you have more than one house? Do you have rental properties? All of that and more. Do you have an office building that you own or you're leasing? All of that should be listed. Of course, cash value on your life insurance, because if you do pass, they want to make sure that somebody's going to be liable to make sure that this project is done. So they want to know, again, the cash value, the beneficiary face value, cash value, loans outstanding, other assets. They want to know description, title holder, cost, the market value of those assets, age of the assets, if you have stocks, loans, any outstanding loans that are out there, who's the lender, address, of course, balance, due date, how secured, because they want to know again who's going to be in first position if you default. Are they going to be in first position, or the bank going to be in first position to take your assets? And then we're talking about accounts, notes, payable. Again, any debt that's out there with those suppliers, and do you have any charge accounts and things like that? Tax payables. Make sure you have your taxes paid and up to date, because that's so important when we're talking about the description and taxes. And any other liabilities that may be out there, you should list that on these forms right here. Alrighty. Next one, work on hand, which is so important. If you are a new company, you may not have work on hand, but if you're an existing company, you may have work on hand. And you may, again, that's might be why you are going, if you have existing bonding, why you're going for to increase the capacity. It's because you want to be able to fulfill and go after more work. So what they're looking at the job description of your work, who was the owner on those particular projects, the contract price, you know, was the did you bid and win a project at 250,000 or 500,000 original cost plus cost of change orders? Did you have change orders that came in on that project right there? Because you may have bid at 250, but change orders may be another 100,000 or maybe 10,000, whatever. But so they want to know that totals billed to date. And so you may have projects right now that are you're working on, and it may be 2/3 done or half done. So they want to know that the total cost direct to date and total revised estimated cost of completion. You know, when you're working on the project, of course, the cost may be overruns on that, which we just mentioned. All of those things are so important. And they want to know, of course, too, have you been able to complete these projects? Because they want to know your success. They want to know your history. And they want to know, again, when we're talking about work on hand, how many projects can you handle, which is so important. And so that should be the last slide when we're talking about work on hand. And we'll open it up for questions. And at the bottom it says contract completed. We talked about a lot of that. And so does anybody have any questions? Quite. Did I answer
Right,
everything
yeah.
already?
If you have questions, feel free to enter them into the Q&A box, or you can raise your virtual hand and then we can allow you to talk to Alan directly if you have some specific questions.
This is Andre speaking. We have a question about a lot of small companies who do need bonding or lifestyle businesses. So when we're looking at a lifestyle business, the question becomes, is a lot of those people do live through the business. That's why it's a lifestyle business. So is that going to prohibit them from getting bonding?
No, but all of that needs to be explained. Perfect example is a concierge. A concierge in a hotel would require a bond, and that is a day to day because again, when you ask them questions, it may be questions again that again you may be sending them or handling their assets like the concierge. It's so important at a hotel to make sure you're having a great stay. But you also have to trust that concierge, and that's why a concierge may need a bond, but that's also their livelihood. And so when you're looking at many different ways of how bonds are used, there's surety bonds, there's a payment and performance bonds. And when you use a payment and performance bonds, you're saying that making sure that the person or company or the liability aspect is going to get paid. That's why the payment and performance bond is put in place. And there's so many times, like even with the unions, or you're doing a project, and the unions want to make sure that the union dues is being paid. And so they may require that you have a payment and performance bond while you're working because maybe it's a union contract that you bid it on that you won, and the unions there's union dues. So there's many different things when we're talking about again the use of these bonds and how they're being used in many different fashions.
Okay, thank you.
Alan, can you talk about what your webinar tomorrow will cover?
Yes, we're going to get more in depth. Today was basic information. Tomorrow, I would like to talk about again, if you're a company, you've been existing for a while, how do you grow your business? How do you get and grow that capacity on a business? Again, making sure that you're using the capacity to grow. How do you get a bigger aggregate? Those are the kind of things that are so important too. I also want to talk about again the performance bonds, the payment bonds. I want to talk about the individual surety because a lot of times people don't have great credit, and you may have to get started with an individual surety. Or when we talk about the corporate surety, when you're looking at the RFP and you read, I want you to make sure you read where it says surety on there what are they looking for? Maybe it may be an AM Best bond that they're looking for. That's an insurance bond that they're looking for. I want you all to know all of that. And we'll talk about all of that tomorrow. But for years, minorities couldn't get access to bonds, which we first started with. But Congress also passed language that made sure that minorities could be at the table on a lot of these projects, especially federal projects. And so that's why an individual surety was created and it's been created for years. And then we have corporate. Like I said, I'm going to talk about all of those details tomorrow and understanding when you are bidding on a project, why it's so important to go down where it says surety. Is it required on a project? Because recently I had one and they were bidding on the project and they didn't read that part. And the owner of the project came back and said, are you capable of getting a bond? And he was like, oh, I didn't know I needed one. Well, he had overlooked that section right there, which is so important.
Okay. I
Any
have
other
an,
questions?
yeah, I have an, is there anyone else with questions?
I
So,
think your last question, Andre, and then we'll let Marie do her piece.
okay, excellent. So, one of the big things we run into with our smaller businesses is the aspect of that they are small. They don't have bonding. They never had it. They were able to umbrella up under a bigger corp for a small project. Now they need to have their own bonding in place.
Mhm.
What have you seen as far as, a small company? What's the average bonding amount a small company would go after? I know it's hard to say, but reasonably expecting a small company to be able to bond what? Let's say they have medium credit.
Credit is so important. We're going to talk about that tomorrow too. But credit is the basics of, again, how do you apply for these bonds? And the reason why I always ask the question, what type of projects are you going after? Because when you look at the projects that you're going after, like with the U.S. Department of Defense or the Corps of Engineers, are you bidding on projects at 100,000, 250,000, a million? Can you qualify at that rate? First, I always recommend is make sure you fill out the application and get pre-approved. If you get pre-approved, especially as a young business, then you know what size projects that you can go after. Can you go after a $250,000 project? Can you go after a $500,000 project? You need to be pre-approved, so that gives you the range. But then there are other projects too that may not be governmental contracts, they may be private contracts that you've been bidding on, and now you're building up a track record, which is so important because the track record leads to you bidding on different projects because they want to know, again, can you complete the projects? And we'll talk about more of that tomorrow.
Awesome. Thank you, Alan. I'd like to hand it over to Marie Peters. Marie is here on behalf of B-Side, and she's just going to give us a short overview of what products they can offer for those of you that are on the webinar here.
Thank you so much, Sarah. Hi, everybody. My name is Marie Peters. I'm the fund director of B-Side Fund. We're a nonprofit organization and a nonprofit lender, and we've been around since about 1990. And we're really dedicated to help small businesses who, for whatever reason, can't obtain bank financing to be able to provide that runway for their capital to be able to grow and thrive here in Colorado, but we also operate in Arizona, New Mexico, and Utah. So just a quick overview, we do have, we primarily work with the U.S. Small Business Administration loan programs. And so we can do commercial real estate projects all the way up to $5 million, with our sister organization, B-Side Capital. But what I'm going to focus on today is our direct loan program for businesses that, again, might not be able to get financing through a bank. And so we can offer term loans anywhere between $20,000 and $350,000 on a 3 to 10 year term. And our maximum interest rate is prime plus 4.5. We do have some variable rate options as well as some fixed interest rate options. And so when you apply with us, we basically take a look at your business, where you're operating, what you're going to be using the loan for, and then we can provide some various programs, as Colorado here has like some really great specific programs. And we'll just make sure whatever you're eligible for, we can present that to you. Something I'd like to note is that we don't have any prepayment penalties. And so, like I said, we want to help with those capital needs. But if you take a loan out with us for maybe 10 years or something like that, but you're doing really well, year 3 or 4, or even year 5 down the line, you can prepay us at any time. Or if you're able to qualify with a bank at that time and refinance, we encourage that as well. For us, our loan programs, you can use the loan for a variety of reasons for business purposes, such as working capital, the purchase of equipment or inventory. If you need to refinance debt, for instance, if you've fueled your business using high interest rate debt or maybe a business credit card and you're ready to refinance that, we can do that at a lower rate. Or even business acquisition. We know a lot of businesses that we help do start from scratch, but accessing entrepreneurship through acquisition is another way for business owners to operate their own have their own company without starting it from scratch. And so we can help with those transactions as well. We do require that any owners that own 20% or more of the entity personally guarantee. In most cases, we are going to take a lien on business assets. And again, in some cases, we do require that the borrower or the owners do kick in a portion of the project and have insurance as well. But again, we have various programs, so depending on how much you're looking for and what you'll be using it for, we can let you know exactly what those requirements will be. Our application process is really simple to get started. We have an eligibility check on our website, so you could check it out at B-Side Fund, where we start to collect details. And if it looks like you're going to be eligible, you can formally apply, and then we'll start collecting documentation from you using our secure document portal. Then we'll review everything, and then we have to pitch it to our loan review committee for their approval. If it is an SBA loan, we do send it to SBA for their approval as well, and then we close and fund that loan. We are happy to answer whatever questions that you have along the way. A lot of times we are the first lender a business may be working with, and we know that it can be an intimidating process. And so we're happy to answer questions. Or if your business is not quite ready for financing, we're happy to provide advice and resources like the Minority Business Development Agency to help you get all of those things that you need to be able to apply for financing. So again, we do have additional resources. You can feel free to reach out to us. We're happy to answer any questions that you have. Our entire team is able to answer those questions. So thank you for your time, and we look forward to connecting with you.
Thank you so much, Marie. Appreciate that. Thank you to Marie. Thank you to Alan for your presentation today. Alan, we look forward to part 2 tomorrow at 11 o'clock. I've put the registration link in the webinar chat if you'd like to register for that. I will also follow up to all the attendees today with a copy of Marie's slides, a copy of Alan's documents, as well as the registration link for tomorrow. So, sorry, my kids just got home. Summer schedule.
Awesome. That's okay. Awesome. All right.
And with that, I think we'll give you a few minutes left in your day, unless you have anything else you'd like to share, Andre.
Yep, I would just like to invite everyone to come speak with us here at the MBDA Center, and more than happy to help you. We'll refer you to Alan, make that introduction, and of course to Marie. She's awesome. I know we've sent quite a few clients over to Marie, and they both know what they're doing. So reach out to us. Let's have that conversation, and like Sarah said, let's enjoy the rest of our day. Thank you, Sarah.
Thank you so much. Bye, everyone.
Thank you.